Hello, everybody, and welcome to the Dorsey Wright podcast for Wednesday, July 15th. I'm Jay Gragnani, and here joining me this week is Ian Saunders. And, we were just sitting here talking to Ian before we hit the record button, and it's hard to believe that as we're sitting here July 15th, which July 15th is federal tax day for everybody this year. If you haven't filed your taxes, you had until today, July 15th. February 15th, man, that seems so long ago. July 15th, and the summer by the historical months, June, July, and August, we're basically at the halfway point in the summer months here, right smack dab in the middle of July. And there's certainly a lot of news that is coming out every single day. A lot of news around the economy reopening, around economy slowing, reopening, what's going to happen with school systems around the country, and just a lot, I think, of uncertainty that continues to surround the state of the economy, the opening up of the economy, as well as the general process around COVID-19. And so one of the big news items that came out last night on Tuesday evening on the 14th was some positive news. It was news that, certainly positive news that some of the initial trials for Moderna vaccine on COVID-19 are showing some positive signs. So, that is certainly a very positive sign out there in the marketplace, a positive sign for a potential vaccine that might become. That doesn't mean that it's, signed, sealed, and delivered, but certainly things appear to be moving in the right direction. And as you look at the chart of Moderna here today, the news overnight and pre-market this morning took that stock all the way up to $88, hitting new all-time highs, surpassing the surge that it saw earlier this year back during the May time period, briefly eclipsing that. It has backed off a bit as the market has a little bit so far today coming in, where the futures were up big today, and you look at the chart of the S&P 500, and what we see that index, the overall S&P 500, continues to trend upwards, but certainly has seen and is testing a pretty notable support level that we've seen test here over the past few weeks.
Absolutely there, Jay. And like you said, coming in here today, seeing a little bit of back and forth movement, especially intraday over the past few days here, as we're coming in here to the halfway point of the summer, like you said. But coming in here today with that positive news, looking at pretty much every S&P 500 individual sector is in the black on the day, at least thus far, with trading at the time of this recording, which has led the broader S&P 500 index on that 20-point chart that we have tended to look at over the past several weeks to reverse back up into a column of X's after reversing down there yesterday. Reversing back up, matching that near-term high that was reached earlier in June, and then reached earlier this month, and now back up at that 3220 point, forming that spread triple top formation there. So movement to 3240 would lead to a third consecutive buy signal here in the chart. Actually breaking it through a spread triple top break there. And also this movement that we've seen over the past week or two here is movement kind of back and forth has led to some near-term support levels being added on this 20-point chart that we've been following. With the reversal down yesterday, we now have the near-term support offered there at 3140, and then further support just beneath that there at 3120, and then the support that we have been looking at for the past several weeks down around the 3,000 level at 3,000, and then right beneath it there 2980. So I guess one of the beneficiaries there of the increased volatility is the increased support levels that we're getting here on the charts. And so continuing to see, multiple consecutive buy signals forming another top formation, spread triple top formation there is certainly, I guess, a positive sign for the broader domestic equity space as we look to continue down the second half of the year here, Jeff.
Yeah, and you're right. You certainly have seen, while it might not show up on something like the VIX, we've seen a ton of intraday volatility in the market, especially this week, with seeing big swings intraday up and down. And so we're sitting here at 1:30 Eastern, recording this, and the S&P 500 is around 3224 right now. Got up as high as 3238 earlier today, and so very close to actually breaking that spread triple top of 3240. So that certainly something to watch From there, if we get through that, then not much overhead resistance until the February peak back at 33.80. But you're right, it has developed some near-term support, much closer as a result of some of the volatility that has taken place. And Yolanda, we mentioned, the news out of Moderna. There's, certainly a lot of earnings that have kicked off this week. Some financial companies starting off earnings, getting some earnings coming out of some big tech names here in the coming weeks. And that's really been the big story of the S&P 500 this year, is the strength within big technology. Seeing a lot of those names move to new all-time highs, seeing a lot of those stocks really carrying the weight of the S&P 500, as well as healthcare. Those two sectors make up a big chunk of the movement of the S&P 500. Technology being the largest at just under 30% of the S&P 500. Healthcare makes up another big chunk of that as well. But those have really been the two sectors that have driven the S&P 500, really the two sectors that have been in the spotlight here over the course of the past, really few months throughout this volatility in the market, dating back to mid to late February, when we were at all-time highs before the subsequent sell-off. But, it's interesting, as you kind of look underneath the surface, there's been some interesting developments taking shape from some home builders. And, you look at a number of home builders out there. This one, D.R. Horton, DHI is the ticker symbol. So, moved back into a positive trend in April, went through a period of consolidation recently and just broke out, similar in scope to what the S&P 500 chart looks like, but completed a spread triple top breakout to the upside at $60 and is really close to now those all-time highs, or got close to the all-time highs at 62. It's not just isolated there. You look at, that's D.R. Horton. Lennar is another one. LEN is another one that just, completed another breakout there, reversing up to make a higher bottom today, breaking out, moving up to 68. And, again, coming close to those February peaks back at $71. So some very positive developments out of the building space after moving back into positive trends earlier in the year. Going through a period of consolidation pretty much for much of June and early part of July, now breaking out to the upside, both S&P 500 names, but those are, certainly a couple names that the building sector at large is a sector that continues to be strong. It's a favored sector when you look at the DWA. Building sector is considered a favored sector right now, and there's a number of names in the building space that look good, like these breakouts on Lennar and D.H. Horton, excuse me.
Absolutely, and you mentioned as well. I mean, this part of this movement we've seen, this back and forth movement over the last few days, leading to these buy signals being given here in some of these home building names, and we've seen that in some other names across the board as well, both within the S&P 500 and then names a little bit outside of the S&P 500, maybe getting outside of that large cap focus that has been the theme for throughout much of this market rally that we've seen. Looking at charts that might look similar to those with the reversals down and then subsequent reversals back up with the positive movement today, seeing a lot of increased participation across most of our bullish percent indicators that we're tracking here on the platform. Looking at the big bellwether, the BP NYSE, we can see that chart is showing an intraday advance of almost 5.5%, to put it at an intraday calculation of 56. So not quite enough to get that to reverse back up into a column of X's, which would occur at 58%. But it's certainly heading in that direction, at least with trading at the time of this recording here. A couple other areas, though, are showing enough movement to either continue higher there on the chart or reverse back up into X's. The S&P 500, and given the focus there that we've had, that's a chart that we did see reverse back up into a column of X's earlier this month at a chart level of 56, and it's advancing over 8% intraday as of now to put it up at a chart level of around 64%. But then looking at some of the other areas outside of the large cap, looking at mid caps and small caps, both of those, the bullish percent for the S&P mid cap 400, as well as the bullish percent for the small cap 600, have remained in a column of those. Didn't follow the S&P 500 back up in X's there, but we are seeing those posting significant gains with movement at the time of this recording today. To causing the S&P mid-cap 400 bullish percent to reverse back up into X's from 48% all the way up to 58% that we're looking at here now. And then as well, looking at the small cap 600, reversing up from 50% up to 58% as well. So it is good to see, I guess, increased participation across the board coming from areas maybe outside of those spaces that have kind of led the way out of this market rally, that you're seeing some of these other areas continue to bring the broader market up higher. That may potentially lead to the reversal higher there for the broader indicators such as that BP and NYSE here sometime in the future.
Yeah, and that is a positive sign. I mean, small caps have really lagged. You look at the IWM, which is the iShares Russell 2000 ETF, and even year to date, even with the recovery that it's seen off of the lows, it's still down 14% on the year through yesterday, through the 14th. And the S&P 500 is down less than 1% through yesterday. With today's action, if gains hold, will likely turn positive on the year. But the sign of small caps beginning to participate, it's not that we've seen small caps move into a leadership position and overtaking things like large cap growth, although small cap growth within the small caps has been a leadership trend there. But the fact that small cap stocks in general across the board are participating and seeing positive breakouts like we're seeing on the chart here of IWM is certainly a positive sign. It's an encouraging sign. IWM moving back to a buy signal at 146 after holding support in the 134 to 138 area. So again, not that small caps have come back into leadership position, but certainly a positive sign. As small caps are doing very, very well today in their returns, and IWM, IJR, a number of small cap based ETFs out there that are showing positive breakouts within positive trends. And so certainly it's something good to see, and obviously you're seeing a sign of evidence of the small cap participation that is taking shape in the market. Again, when you drill down and you look at your small cap space, and you look across kind of the styles, small cap growth is an area. If you're looking for small cap exposure, small cap growth is where we would be leaning towards as the leadership area within the small caps versus value. So if you're looking for small cap exposure, if you're underweight in that area, small cap growth would be the dominant area of small caps right now to consider.
Certainly, and then there are, in addition to, like you said, the large cap focus that we see in some of the other areas showing improvement here being a positive sign, there are some areas as well outside of the domestic equity space that are showing some continued improvement, especially over the last week or so here. Specifically looking at the chart of EEM, the broader iShares Emerging Markets ETF there. You can see on that chart that fund has given 4 consecutive buy signals since moving off its near-term low there at 30.50, and really in large part on the backs of a lot of the improvement or strength that we've seen from China. China now making up over a third, almost 40% there, of most broad emerging market indices, has really pulled the emerging market space as a whole quite significantly higher there, especially over the past couple weeks. Looking at the fund score of EEM, you can see that score improved off some of the backs of the major improvement we saw in China at the beginning of last week. Saw a major score improvement across a lot of the Chinese equity funds, and then some major score improvement on the backs of a lot of the emerging markets funds as well, moving from a score of around 3.6 on July 8th to a score of around 4.6 on July 9th. So almost a full point score improvement there in just one day is certainly not something you see necessarily each and every day. And we've seen that carried over on some of the broader funds as well. And looking at EEM, the broader emerging market space has continued to show improvement through a lot of our relative comparisons, such as those that we have on the asset class group scores page. And looking at the non-U.S. view on that page, you can sort all of the ETFs and mutual funds that are going to be within each respective regional or country breakdown that we have on the page. And obviously, China is going to be the top scoring group out of that breakdown with an average score of 4.99 through trading there on Tuesday. Score briefly ticked up above the 5.0 level in the past week, and then ticked right down beneath it there, and with movement there yesterday, but still hanging around that 5.0 level. It's the first international equity-related group to move back above 5.0 since the drawdown there began for the international space there in February. So definitely the place of continued strength, and it's maintained that strength throughout much of the rally that we've seen for global equity markets. But you look at the other broader emerging markets group, your all emerging markets equity group, your emerging markets diversified group. Those are areas that have typically lagged some of these broader or these more focused country or regional groups, but they're definitely showing pretty significant improvement here as well. Sorting the non-U.S. page by that direction shows you that the emerging markets diversified group and emerging markets equity are the second and third highest score directions out of any of those non-U.S. areas. So it's definitely good to see that further follow through into the broader space. And you get some further insight if you look at the score history of those groups. Looking at the score history of the all emerging markets equity group has sitting up there at an average score of 3.59 through trading on Tuesday. And it's shown some difficulty over the past few years to kind of break out of this 3.5 to 3.6 range since really the mid 2018 timeframe when it began to decline from there. So it'll be interesting to see moving forward from here if the group is finally given the vast score improvement, that positive score direction that we've seen, if it's able to move past those. But will definitely be a place to continue to keep an eye on here as we head down the rest of the summer here, Jeff.
Yeah, that will be interesting to watch, and it's interesting. You can look at that and see really how strong emerging markets were in the early part of the 2000s, where you were seeing very regularly scores in the fives and the high fives, and that decade of the 2000 to 2010 time period was a very important time period for international equities, very important time period to have allocation to international, especially emerging markets. And the past 10 years has kind of been the opposite story, where you've seen some fits and starts out of international and emerging markets, but you haven't really seen much in the way of sustainable trends there. So it will be interesting to see if we can see those scores tick up into the fours and fives from here. So, but certainly positive signs coming out of the international markets there. One last thing that I mentioned, and Ian, I think I mentioned this to you earlier, and this was prior to the news that came out of Moderna, which now I think takes the cake for the most positive news that we've heard this week out there is that there is a path, at least, or some positive signs for a vaccine for COVID-19. The second most positive news in my book came out of the auto industry. And it wasn't from Tesla, it was from Ford. And for those of you who follow Ford, for the first time in 25 years, they are now going to bring back the Ford Bronco. And so that's something that's near and dear to my heart, as my grandparents owned Ford dealership as I was growing up, so I was always around the Ford dealership. And I happened to look back. I'm thinking, geez, Ford stock price is down now at $6 a share. Where was it 25 years ago? Well, it was almost twice where it was today. If you look at the chart of Ford and expand it, so maybe this is the catalyst to help resurrect Ford share prices again. But it's a little left to be desired as it stands right now on the chart of Ford. Long-term trend is still negative, has given a near-term buy signal off the bottom, but still has a little bit of work to do from here to get back into a positive trend. Up around $9 would put that chart back into a positive trend. But exciting nonetheless to see a classic in the auto industry be resurrected. And if you haven't seen pictures of it, if you're a fan of the Bronco, I would encourage you to take a look. And if you're so inclined, I think they're taking pre-orders for the vehicle. So Ian, you can get in line.
I'll have to get behind you there in line. I think a lot of people seem to be following your lead there on the backs of the Bronco, with Ford up about over 5.5% today. So be interesting to see where that moves from here.
There you go. Well, that sounds good. Ian, always enjoy the conversation. As always, we appreciate everybody taking time out of their day to listen, to see what we have to say, to listen to the markets. And, as always, we endeavor to try and bring timely information right to you via these podcasts. as well as through our subscription service, such as our daily equity report and weekly videos. If there's anything that we can do, please don't hesitate to reach out to us. Otherwise, thank you again for listening, and look forward to being on with you next week.